Rob's Child. I wanted to do a quick market update. High Yield Corporate, HYT, my favorite fund for that kind of exposure, just broke to a new high. I think that is going to lead stocks higher. It's a pretty good indicator to see where things are going. HYT holds, so High Yield Corporate represents bonds, so guaranteed payments, but of companies that are more risky. I think it includes some preferred shares too, but it has that kind of fixed income aspect of riskier companies. Now, what I find very strange about this situation is that it doesn't seem to be correlating with what's going on in the treasury market with treasury yields. Treasury yields are not they dropped today, but we're still near like a peak in the 30-year bond, and typically high yield corporate is longer duration fixed income assets, and so we should see, if treasury bonds have a higher yield, the high yield corporate should have a much higher yield. And the market just doesn't care right now. They don't care that you can get a guaranteed 30-year bond return of over 4% right now. And they're excited about the a much less safe return in high yield corporate. I mean, it doesn't make sense. It doesn't make any sense whatsoever. Eventually something has to, this has to decouple. They have to go their separate ways eventually. This can't keep going on forever. You can't have super high rates, especially on the long end of the curve, along with high yield corporate becoming more valuable somehow. There's other things in the markets right now that aren't correlating either. Of course, the return of the S&P 500 right now, the total earnings is lower than what you can get on treasuries right now. As I mentioned in another recent video, and if you follow these kinds of videos, you might be aware of that situation. And it oftentimes is a pretty strong predictor of pretty bad problems coming up ahead. But for now, the yield curve is still inverted. And typically, as far as I have seen in markets, I think anyway, we usually get like a peak kind of a thing in stocks after it uninverts, because everything's fine now because the long end of the curve has higher yields than the short end, so everything's fine, everybody's comfortable, and then that's when we really see the real collapse typically in stocks, where stocks go way down, and then rates go down as a consequence to try to chase the fact that everyone's going to be spending less money, companies are going to be earning less money. It's harder to pay off debt, so debt has to become cheaper, kind of a thing, and then the treasury bonds, everything go up in value because as the yields go down. So anyway, and maybe today is like a black swan event. We had a lot of crazy things going on with Bitcoin. The Grayscale won that case against the SEC, and then we also had Nvidia and Google, which have been really controlling most of the stock market lately. They had some very bullish news because they're apparently joining forces to make some super techie thing. Don't really care. But yeah, I'm looking for new highs in the super short term for the S&P 500 and stocks. And yeah, this could be a good time to be selling risky stuff. I am going to be doing that personally. But nothing I say, by the way, on this channel is investment advice of any kind. You're responsible for your own decisions. Thanks for listening. Rob's Child.